some reason.
Yeah, I don't know why. There we are.
Okay.
The Hangout is now live, so we're now live.
Okay.
So you can start looking in a moment. So welcome to another Speaker's Corner. This week we have Hannah MacKinlay, who's going to talk to us about the ever burdensome SDLT and what it might mean for solicitors. So welcome to Speaker's Corner.
Thank you, Charles. Thank you for inviting me.
I'd just like to ask you a few questions about SDLT. And I wondered if SDLT is something that's got easier for conveyancers in the last 12 years since it was introduced.
Well, I don't think SDLT has actually changed too much. The difference is the solicitor's perception of it. They now realise that in actual fact it is a tax and it's much more serious, and that there are going to be professional indemnity issues if they don't deal with it. And I've been staggered over the last 12 years of how little they know about it, the bad way and the negligent way in which they deal with it. And the only way they've got away with being so bad about it generally is that the Inland Revenue have been singularly useless at enforcing it. And if they enforce it anything like as well as they do inheritance tax or value-added tax or capital gains tax, solicitors would have been terrified, and it would have been done by accountants, which it should be, really. So no, I don't think it's actually got any easier. It's just they've been lulled into a sense of false security because of the revenue being useless and enforcing it, if that helps you.
But so what are the risks for the firm then?
Well, this is evidenced by lots of people like finance directors and treasurers, and also in-house estate surveyors from major high street retailers and national chains coming on my courses because they are so fed up with their solicitors dealing with the tax. And in one case, one of the major national retailers told me that they'd given their solicitors a list of every transaction they dealt with since 2003 and told them that either they went through the tax returns and did them properly and did the corrections, or they would sack them and sue them for negligence. And so the solicitors had to go through all their old files going back 7 or 8 years at the time and pay extra penalties and taxes and give them extra advice and not charge anything at all for it. And this is major national PLCs that I can't mention who are telling me that they are disgusted. And one of them said, I've got 500 to 1,000 major properties with major leases of rents of 50 to 100,000 a year plus, where it's all been done wrong by the solicitors and they haven't kept any records whatsoever. So you may find you lose the clients and you get a lot of extra work and you also pay a lot of tax. Another example, a specialist in SDLT is rolling out a service to commercial property clients where he will investigate their tax returns that have been prepared and claim overpayments from the solicitors. And he said 25% of them are overpaid and 75% of them are wrong. So if that's not a risk, I don't know what is.
So does the issue of the SDLT5 actually mean anything?
Nothing at all. This is what, again, solicitors don't realise. It is not like stamp duty. It's a self-assessed tax. And the SDLT5 only confirms that they have received your tax return. It means in no way that they aren't going to inquire on it. They have an automatic window of 9 months plus 1 month in order to inquire, even if the tax return is correct. And if there's anything wrong on the tax return, or you haven't taken into account various items of consideration or other reliefs or other circumstances, they have in some circumstances got up to 20 years to come back and raise an inquiry or an assessment. The normal period would be probably 4 to 6 years, but in cases where they've been completely reckless about it, such as giving it all to a paralegal to do, we're talking about a 20-year period. But so many solicitors think, oh, I've got the SDLT5, therefore I don't have to worry about it anymore.
Oh, so what do firms do then?
Well, as I say, it's realising that it is a tax and dealing with it in the same way an accountant would do. I mean, it's interesting that when I get accountants on my courses and I ask them how much they charge, they would say, well, we generally charge between £750 to £1,000. The solicitors on the course then fall off their chairs because they're probably not charging that much for the conveyancing. And the accountants say, well, you're insane doing it 50 quid. You don't know the liabilities. And, you know, clients are quite happy for us to charge them that sort of figure for doing inheritance tax returns, capital gains tax returns, income tax returns, corporation tax, Why is it any different? Why should we do it for 50 quid in a packet of Smarties, which is what you tend to be dealing with it? And the way in which they deal with it is different. The way they deal with it is to warn the client that this is a tax, that bad things will happen to them if it's wrong, that the revenue might start investigating the VAT and their corporation tax and everything else if they don't do it right. So clients appreciate that this is something that is serious. They also emphasize that the revenue got a long period of inquiry, and it's important to get it right first time. They then send them questionnaires. They then ask questions about these corporate structures, other transactions, before even they get to the stage of drafting documentation. And certainly this sort of inquiry ought to be made and warnings made before you exchange contracts. In many cases, you may have to restructure the deal as a result of what you find out about the scene behind, and you may have to do tax planning, etc. So clients are sort of readied up to expect that this is more than stamp duty. And then having got that information, they would then do the tax return, and they'd warn them with a draft that this is important, that they get them to sign off and accept it and understand that there could be further queries, penalties and criminal prosecutions, etc. So that when the final tax return is submitted, clients accept all the risks that flow from it. And as I say, accountants do quite nicely out of it.
So in practice, what does this mean?
Well, as I said just now, it means changing your processes. It means not dealing with it by tinkering around with your terms and conditions. It means making sure that the people who do the tax returns are people who actually understand the deal, not having the horror stories I heard of one firm on the South Coast where they have a paralegal doing all the tax returns for the entire firm, emailed in on the basis of just a copy of the transfer, when you cannot even guess what the appropriate tax is just by looking at the transfer. Dealing with it like a proper tax in the way that an accountant would deal with, and dealing with it seriously, rather than just an afterthought to the conveyancing.
So if I am the culp in a firm that does this sort of work, is this something that I need to be worried about? Absolutely.
It's a major risk issue. Let you give you an example. A transfer at £1.6 million, the fee earner solicitor paralegal who did it assesses that as a commercial transaction at 1.6 million, 4%, pays, I can't do the maths, 1632, £64,000 SDLT. However, do you know what the correct tax should have been?
No idea.
They paid £48,000 tax too much.
That's quite incredible.
Because they didn't ask the question, what's on the land? They didn't realise that there was a relief that was available that could reduce it. But that sort of comes off the PI. If that's left more than a year, the firm has to write out a cheque for £48,000 plus perhaps 30 or 70% penalties plus interest. That seems like a risk issue to me.
So what you've just said is that in a case like that, it's the firm that would have to write a cheque.
Yeah.
That's quite astonishing, isn't it?
It is, because firms do not make it clear to clients what it is. They do not make it clear that it's a self-assessed tax. They do not do proper inquiries about the circumstances of the transaction or inquire about linked transactions or connected parties or anything like that. They just assume that they could look at the transfer and do the tax.
This sounds like a potentially enormous problem for solicitors' insurance.
It is entirely. We already get fed up with people ringing up saying you've got a PPI insurance claim. I can see there'll be reams of claims managers ringing up commercial property clients saying, have you got an HMRC overpayment possibility that your solicitors have screwed up? There could be another angle for you there, another little business. You might not get commercial property clients coming on your courses, but...
Yes, you're reading my mind. That's quite terrifying.
But the good news is the revenue are crap. And
well, that's not such good news, is it? Because sooner or later, when they catch on to this, they're not going to be crap, are they? They're going to start looking into these things carefully, I suspect. And
all the risk will fall with the solicitors because they've not explained to the clients that this is a self-assessed tax subject to inquiry. They've not made the appropriate warnings or advice, and they're basically going to be seen, I'm sure, by the SRA and the Ombudsman as underwriting the amount of the tax extra if it's been overpaid.
Good Lord. Well, this is another very good reason why the SRA shouldn't have abandoned CPD in the way that they did, because it would appear that those people who aren't properly trained in this, and perhaps some of them rather stupidly won't be, would be ignorant of this sort of thing. Their insurance company, no doubt, would ask what their level of training has been, and they probably say, well, we did it ourselves on Facebook. And so the next thing is going to be even more problems for the solicitors themselves, who may find themselves personally liable. Well,
who knows? It's an unexploded bomb, I might say. But I talked to someone who used to be at the Revenue. I said, why are they so rubbish at enforcement in the Birmingham Stamp Office? You know, the laws of libel and slander putting to one side. And she said, well, to be honest, they just live in a little bubble. I mean, this is only her opinion, and they don't really communicate or cooperate with the rest of the Revenue. So I was told. And whereas if it had been done by a VAT office or inheritance office, they'd have been, you know, all over firms of solicitors and raising inquiries and doing assessments and warning them about it.
Okay, so final question. If I were the culp in practice and I'm watching this, or clearly I know who the culp is in the practice and I'm watching this, what would you advise me to do straight away?
First of all, you've got to make sure that it's treated as a tax. You've got to make sure that clients, in my suggestion, if you look at my website, www.propertylaw.guru, sorry for the plug, but you'll see that I've prepared a number of guides and guidelines that people can download as a suggested way of communicating with clients to try and get them to understand that it is a tax. Then, once you've got this sort of hearts and minds of the client to appreciate this is important, making sure that the fee earners who are doing the tax returns do the appropriate due diligence before they do the tax returns, and that they warn clients about this in the same way that an accountant would do, and they make sure that the client realises that any tax return is subject to inquiry and assessment, and that the figure on a completion statement or a figure in their letter is subject to variation, and that if it is subject to inquiry or assessment, that their conveyancing fee does not cover it, and that any further work is going to be added on top, and it may be appropriate that a firm of accountants or tax specialists does the work, not them, and that they are not at fault.
Well, okay. Although I'm not a culp in that sort of firm, if I've been doing this work now for 20 years, and I've just learnt from you that there's a 20-year window for the Revenue to look at what I've been filing.
Well, then, only in cases where there's recklessness and carelessness and that sort of thing.
Right. But should I start looking back at all the files that I've worked on for the last how many years?
Well, you should really think about all the files you've done since 2003. Because I say that's what one firm of solicitors have been told by their leading national retailer they've got to do. Horrible, isn't it?
Well, I'm rather lost for words. It's terrifying. It sounds possibly even as bad as the "Have you got PPI?"
It is. It's mis-selling, in effect. It's the same sort of thing. Now, I thought when I started doing these lectures back in 2003 that it would last about 6 months or a year, and then solicitors would think, what the hell are we doing these for? We have all this liability, and they'd start involving accountants. But because the Revenue were not very strict at enforcing and adopted a light touch, and because solicitors are their own worst enemies at undercutting and unable to explain to clients what things actually cost and why it's important, they all just started doing it as if it was a form and spending as little time as possible. And it's one of the difficult things, as one solicitor said to me, is how do we now explain to clients that we're now asking all these questions? And they may say, well, why haven't we asked these questions before? And you can't really say, well, actually, we've been a bit negligent in the past.
Oh, God, no. Oh, dear.
Do you just keep your head down and hope that nothing happens? And perhaps,
could you... could you let us have the website address that you just given us again, in case people
it's www and then all one word propertylaw.guru. No code or UK. Propertylaw.guru. No modesty involved there at all.
Well, thank you very much for that. I think I might go and have a lie down now. So until next month,
Okay.
we'll go a little further.
Yep, delighted.
Thank you very much.